Namaskar and good morning. Today we will take a look at ESCORTS Ltd, which has been progressing very fast in the last 2 years. Of course, it had some problems prior to that, but during the last 2 years it has been progressing very fast. ESCORTS has 3 divisions. One is the agricultural machinery division, another is construction equipment division, another is railway products division. Agricultural machinery, construction equipment and railway products, 3 divisions. Now it has declared reasonable results in Q3. Now speaking on the results, the chairman and managing director Mr. Nikhil Nanda said, ESCORTS today is driving technology-led growth. Technology-led growth. So they are infusing modern technology into it. Across all businesses and endeavor to engineer unique engineering solutions for mechanized agriculture and strengthen infrastructure. So it's agricultural equipment division and construction division, both are being infused with the new technology. Now he says further, we are continuously investing in new technologies, new product mix and expanded distribution network for significant domestic growth and global reach. With the recent technology collaborations and strategic joint ventures with global leaders like Kubota, Tadano and others. So they have struck excellent joint ventures with global leaders like Kubota, Tadano and others. So he says we aim to manufacture innovative products for emerging economies and offer unique solutions for domestic mechanized farming, smart construction and safe modern railways. The joint venture with Kubota is 60:40. 60 in favor of Kubota, 40 in favor of ESCORTS. The joint venture with Tadano is likewise 51% Tadano, 49% ESCORTS. With Tadano it is for high-end cranes, with the Kubota for agricultural equipment division. Let us take a look at the Q3 results. Net profit is 140 crores in Q3 FY19, up by 52.3%. 140 crores, up by 52.3%. From rupees 92 crores in Q3 last year. So 140 crores from 92 crores, up 52.3% year on year in Q3. EBITDA is up 38.2% to 200.5 crores. The revenue from operations is up by 37.4% to 1,655.1 crores from 1,205 crores. Revenue up by 37.4%. Net profit is up by 52.3%. EBITDA up by 38.2%. Now if you take the net profit for 9 months ended December, it is also up by 56.6%. To 363.5 crores from 232.2 crores. Last year 3 months to 232.2 crores. Current year 9 months 363.5 crores, up 56.6%. Now that is net profit. Revenue from operations is also up by 27.5% to 4,565 crores from 3,580 crores. So revenue up by 27.5%, net profits up by 56.6% for the 9 months year on year. EPC has also risen to 11.72 in Q3 from 8.62 in Q2 and 7.7 in last year Q3. Current market price is around 797 and 52-week high and low are 543 and 1019. So it is somewhere in the middle now. 52-week low is 543, current price is 797, 52-week high is 1019. Will it reach that 1019? It's likely to reach. Face value is 10 rupees. Now if you look at volumes, tractor volume is up by 36% to 25,743 units year on year. So the agricultural machinery division is scoring the highest, 25,743 units year on year. Year on year up by 36%. Now construction volume is 1,413 units, up 30%. Railway revenue is also up by 34% to 96.6 crores. Total revenue is up by 37.4%, 1,655.1%. Now let us look at the segment-wise performance to a certain extent. The ESCORTS Agri Machinery Division, tractor sales are up by 36% to 25,743 units during the third quarter of the current fiscal. Now, in the agricultural machinery, EBIT margins for the Q3 is 12.3% as compared to 14.3% compared to 14.6% in the last year. So there is approximately the same thing is maintained. For the 9 months in the current fiscal, tractor volumes are up 25.4% to 71,276 units compared to the previous year, same 9 months. Now EBIT margins for the 9 months of this fiscal are at 14.4%, slightly up from 13.1% of last year. That is agricultural equipment division, mainly tractors, different types of tractors actually. Now the next one is ESCORTS construction equipment division. Sales of construction equipment went up by 30% to 1,413 units from 1,087 units. Now EBIT margins are 3.5%, up from 2.2% in the same period last year. So this is quarterly results. Now for the 9 months, the equipment volumes are up 38.9% to 4,089 units compared to the last year 9 months. EBIT margins are up at 2.2% compared to 0.3% in the same period last year. Now the last one is railway products division. Now we are looking at from the order of importance. Agri machinery is the most important, followed by construction machinery, followed by railway products. Railway products machinery has clocked a revenue of 96.6 crores, up from 72 crores, that is 34.1% up in the quarter, but on a year-on-year basis, 96.6 crores. EBIT margins are up at 19.9% compared to 13% in the same period last year. Now if you look at 9 months period, 9 months period is 290.6 crores in the current 9 months, up 38% compared to last fiscal. EBIT margins in the current 9 months is 21.6% compared to 13.2% in the same period last year. So there is improvement in almost every segment, both sales and both turnover and net profits. The order book at the end of December 18 is more by 450 crores and will be executed in the next 13 to 15 months. So order book is healthy and we can expect very good results in the coming period also. Now the recent developments are India's first autonomous concept tractor is being manufactured by ESCORTS. First autonomous concept tractor. It is called a new ESCORTS Tractor Series 7090 HP. It's a part of the global portfolio of tractors for export markets with the CRDI engine. Then another tractor series is Atom series. That is for the domestic market, 21 to 30 HP. See, generally the new tractor series are 70 to 90 HP, but Atom series is small tractors, 21 to 30 HP. They are called orchard and vineyard tractors. Now, we have seen the ESCORTS is going into collaboration with Kubota. ESCORTS Ltd and Kubota Corporation, they are joining hands for global leadership, for strong domestic and export market share by entering into a global joint venture for technology collaboration and joint manufacturing of high-end, value-oriented utility tractor range. Now, it formed joint venture to establish new common manufacturing and with initial capacity of 50,000 tractors. These tractors will be sold by both players respectively through their separate channels networks of domestic market, in the domestic market. As part of the collaboration, Kubota will export ESCORT tractors through Kubota Global Distribution Network in specific markets as mutually agreed. So, Kubota is a win-win for both Kubota and for ESCORTS. While ESCORTS and Kubota will continue to develop their distribution channel in India independently, they will share their technology platform for mutual growth along with some greenfield opportunities in the future. Both companies will jointly develop new products to cater to India and overseas market. So, this is Kubota. Likewise, with other global leaders, Tadano, etc., ESCORTS has joined hands and it's going to develop high-end equipment in all its divisions. So, ESCORTS is poised for growth, poised for technology expansion, poised for new products, and therefore we can expect a lot more things from ESCORTS. ESCORTS has already been doing great things in the last 2 years, and we do hope that it will do further great things in the next coming period. So it is one of the things that we can look at for our portfolios. Go through it carefully, but it is for long-term investors. In the short term, nothing is predictable. That is my assumption. In the short term, market forces will take over, not the company forces. So, when market forces and company forces join hands in a positive manner, huge market price growth will result. We do hope in the coming days such a joining hands of market forces with company-led forces will come about for a pleasant surprise for all of you. Thank you.